Okay, good morning, everyone. Today is the first day we're going live. I hope someone is excited. Okay, so before we begin, we'll start with laying down some rules. As you all know, it's a prop firm account, so there is limit on how we can trade to some extent. Okay, now this is the rule on it. We have 4% daily drawdown and 10% maximum drawdown. So we'll be constructing our rules to fit into the prop firm rule and restrictions. So daily we will not be doing more than 1% floating risk, and that's going to be like not more than two trades floating. But before we go into that, we'll talk about the rules later. Now let's just face the business straight and see how I approach the market. Okay, this is gold and we are on the 1 hour time frame. I hope this is bold enough. Okay. On a 4 hour time frame, we are going to be marking our structure. Yes, the break of structure. And we can just start from somewhere around here. As you can see, this high here is broken by this impulse move. So that's a break of structure over there. I just want to mark it up so we'll be on the same page and understand what the structure is. And also this high right here, this impulse ran over this previous high. So we have another new high right here because there is a little downward movement here. So this place is considered a high. So from year to year now, there is what I call a break of structure too. And also from this move, this high ray is broken by this candle. I hope that is bold enough. Yeah, and we have this higher low again. To consider how the markets break, we'll be focusing on the body, not the candle. No, not the wick rather. Because this right here, the low is still valid. This low right here, this low here. Even after this movement, I will not consider it a break downward. Yeah, I will not consider this weak movement a break downward because it's just a week. Had it been the body has closed beyond this point here, then I would say the structure is moving downward or is facing downward. But now we are still on the bullish side. Okay, let's mark it up and see what the recent price action is. So this right here is a break of structure. This right here is a break of structure. And this is the low responsible for the movement. This is where the impulse started. So we are still within this range. We are still within this impulse move. Okay, I think there was a little break in connection. So now we go to the 1 hour time frame. This is the impulse. And we'll look for our entry here on the 1 hour time frame. The entry will be based on candle patterns. Like right here, engulfing, because we are on the bullish side now, so we'll be looking for the bullish engulfing candles. That signify a shift in power from the bears to the bulls. Because if a candle close, example here, if a candle close bearish, if a bearish candle close and we have another bullish candle that takes out the previous low of the bearish candle, then close above the bullish candle, the bearish candle rather, that shows the power has been transferred to the bulls. So right here is a perfect way to enter. This strategy is based on two major time frames, just the 4 hour markup and the 1 hour entry. So we look for taking the bullish trade here, the bullish position, and we aim for 1:3. Uh, we aim for 1:3. Oh, this is 1:2.7. We need to make it okay. Now this is 1:3, but the price didn't hit the proposed tipping. But here's the take: after every 1:1 movement, I break even. So on this trade now, I'm neither making, I will, there is high tendency I'll be making profit on it than running losses. Yes, because after this 1:1 movement here, I'm even. This 1:1 pip run, I'm even. Then, the markets face the bear side again. But this is just the simple concept about how to approach this kind of market. Okay, let's go to let's mark up another currency pair. This is Euro USD, and we'll go to the 4 hour time frame. Let's go back a little and mark it up and see how the price is doing. Okay, let's start from this high right here. This high was taken out by this run, so this is a break of structure. This is a break of structure. Yes, and also from here upward, because we will still have to go back to the lower time frame, the 1 hour. So let me just mark the whole impulse up so we can see it when we go to the 1 hour time frame. Okay, now markets did not break this low until the price did not come beyond this low until this candle. So that's where the break of structure to the downside happens. So let's mark it. Okay, then this is the eye responsible for this run. We can see the bullish candle here. So mark this place. Since the eye responsible has been taken out, then we mark this place as a break of structure to the upside. Okay, so let's mark this. Let's mark this. Yeah, and there is another down break here. Okay, so now at this point there is another break of structure to the downside. You can see how I'm tracing the lows and the highs from the most like the slight movement the market is making. Okay, this is the break to the downside there now, and this high right here, this little lower high right here is responsible for this run. So any price above this high is considered a break of structure to the upside. Okay, so here is it, this high right here. Like I said earlier, we are not going to be considering the wick or any candle, only the body. Okay, so we broke above this little eye right here. So this is another impulse. Now I'm marking this so that when we go to the 1 hour time frame, we'll look for possible entries. Okay, and this is, yeah, this is the high, the low responsible for the close of the candle above. Yeah, okay. And so far this low, no candle has closed below this low, so we are still on the upside. Now let me just add this arrow here, okay, this part here, to show we are still expecting bullish movement. Okay, so now let's jump on the 1 hour time frame to see what has happened. All right, this is the high that was broken by this movement, and starting from here we'll start to look for bullish trades, bullish trades. So this is the candle I'm talking about. This is that engulfing candle. This engulfing candle is standing like a little, if we jump on a lower time frame, we'll see it's a little liquidity on its own. It's a little liquidity run on its own. Yes, from this candle right here, it's a little liquidity run on its own. So if we make the entry after the close of this candle, and this trade obviously is not going to be making the run, but another thing is we will not be bearing a loss on this trade, because 1:1 on this trade, we are even already. Yes, we are even already. We've broken even on this trade. So this trade is even, is zero, looking for another movement. Okay, this is it here. This is another one here. This is another one here. We can see this bearish candle and the following bullish candle takes out the previous low by this bearish candle, then close above the bearish candle. This bullish close above the bullish candle. Then we take out this thing and mark up this as our entry. Oh, obviously there is high probability to be taken out there. This trade also has the high probability of being taken out, because this week is almost testing, but depending on where you place your stop loss, if it was not too close to that week, this is also going to be a break-even trade. Okay, we look for entries like that until this break right here. Until there is another one here right here. This trade also, this is probably going to be a loss. Yes, this is probably going to be a loss or break even if the price had moved for like 1:1 towards our side. Okay, this is a loss right here. This is -1 right here. This is a loss here. Okay, but henceforth from here now we start looking for bearish trade. I'm trying to do a back test so we understand what the strategy is. We start looking for that bearish engulfing candle. This is one right here, and this is going to be a loss. Yes, this is going to be a loss. Also, I want you to understand that it's not just every engulfing candle you see you jump on. There is a way you understand the markets. There is high volume of it. What is this called? There is still gaps the market needs to close. The fair value gap is still very wide, so you just wait for a run against your intended movement that just kind of close back on the fair value gap, like something around here now, before you tend to move downward. But let's just say we enter blindly. This is going to be a loss. Okay, then so far we see what's going on this trade. Also, starting from here, we start looking for, starting from this candle right here on the 4 hour time frame, we start looking for bullish entries. Okay. This is one right here. This is the candle here. This is the candle here. You can see it taking out the previous, like I said, these two right here in alignment with your structure on the 4 hour time frame, because this is noting that we are facing the bullish side. This right here is like a little liquidity run, and when I say liquidity, I'm referring to markets trying to take out some buyers before it makes the run, and vice versa on the flip side when it comes to the sell side too. So this year we enter, and also note that I personally I don't do more than 20 pips stop loss. So if I see this candle right here, let me see how wide the pips. No, that pips, okay, it's not more than 20 pips. So this is like 15. Then I'll have entered. Yes, I will have entered, and I will have break even on one ratio one, waiting for the rest to run. But this right here obviously is not the run, but like I said, we are also even on this trade. So right now, this is the recent price action. We are still on the bullish side on the 4 hour time frame. We are still on the bullish side because this low right here that takes out this high is yet to be broken. This week we're not gonna consider it because we focus on the close of the candle body. So presently now on this pair, I'll wait for a little movement in this fashion, something that looks like this, something that looks like this. Then okay, something is wrong with this, and see if within this range we're gonna have a bullish engulfing candle that's going to make the run. Okay, we can continue with the back test, but to save time, and we can just mark up this last candle. We can mark up this last pair as an example. Okay, this is a 4 hour time frame. Like I said, you can start from here. This is a break of structure downward from this particular low. This is a break of structure downward. Okay, nothing run above this high, so we're still bearish from here, from this particular point. From this instant right here, right after this close, we start looking for bearish trade on this move, bearish positions on the 1 hour time frame. If we jump on the 1 hour time frame, we can see, okay, right after this candle, we start looking for positions to run. Okay, okay. This is one right here. We can see, did the candle close above it? No, it happens to be, but if it happens to close above it, that's going to be like a 1:3 run, or probably we break even on it. This obviously is going to be a loss. Okay, let's see. Okay, this right here, this is one right here. You can see the little liquidity run happening right here, because if I jump to a, let me mark this and try to look for it on a 15-minute or 5-minute time frame. Okay, let me just put an indicator. Yes, so as to know where the HPA. Okay, and let's look for this on a 15-minute time frame. Let's go 5, so we can see the whole thing playing out. Okay, yeah, we can see market taking out highs, like equal highs there. You see, just taking them out here and then making the run. Okay, back to the 1 hour time frame. Okay, this right here, this right here. If we enter right here, going for 1:3, obviously 1:5. Yeah, that's a perfect position right there, making the run. After breaking even on 1:1, you break even right here, right here. This is 1:1, and you can see after breaking even here, the price never come back to the entry, so it's a perfect run for us. I think I'll have to make another video on backtesting the strategy, so we can see how it happens in the previous price actions. But now, because of the prop frame, we'll be trading with this strategy, we'll be focusing on the real time. But on weekends, if I have the time, I'll do a video on. So that's the run there. And let's check the 4 hour time frame to see what the, okay, if not for this, I will still be bearish. But now we are facing the bullish side back, because we've broken the high responsible for this run. We've broken the high upward. So henceforth, until there is a candle close below this candle, until there is a candle close below this candle, we are looking for bullish positions. Yes. So on the 1 hour time frame, in recent price action, I'll be waiting to see a slight movement like this that will run maybe a little to the downside, then switch up. Yeah, I'd love to see something like a small break of structure here. Then I look for entries. Okay, so this is, yeah, I saw this earlier this morning, but let's just do a little markup. Seems like we'll be having our first position on AUD USD. So we can see from right here, we are bullish. Okay, still moving bullish, breaking the structure right till this particular low, till we close below this low. So this is the bearish, this is where the bearish movement starts from. Okay, then we went up a little again, you can see the candle, then we close below this low again, so we are still bearish. This is a little up movement here, this is a little bullish movement here. On the 1 hour time frame, it's going to be like some few candles, but we are bearish again, and we broke above here. Okay, let's mark it up a little. We broke above here, because like I said, we are not considering the week. So this body closed above it, then we turn bullish here. Then this is the low responsible for the close. So the low has been taken out, then we are facing the bearish side again. It's just like the normal structure. Just mark your highs and lows. Okay. Then we take this low out again. Here we move with shift bearish till this low was taken out. Now we are facing the upside from this low right here. If there be any close candle close below this, then if there is any candle close below this, then we'll be facing the bearish side. But right from here, we are facing the bullish side, and we'll jump on the 1 hour time frame and look for entries. This is, yeah, from here we start looking for a bullish engulfing. This is one right here, and obviously this is a loss. Yeah, after the close of the candle, let's see if it's not more than 20 pips. Okay, if it was not more than 20 pips, I would have entered this position. Yeah, so we've taken -1 here, but the fact is that we are still on the bullish side. So this is another candle playing out now. So we are going to be taking this position as the first one. Okay, this is 10 points. So like I said, I've not mentioned that each risk on a particular trade is 0.5%. It's a profit account, so we'll be going very conservative. So we'll be risking 0.5% on this position, and the position, we have two entries, so that means 0.25 and another 0.25. The first 0.25, we will close that at 1:3, 1:3, and the second one at 1:5. So in total, the risk to reward will be 1:4. And if we move 1:1 there, we close the entry, we break even after every one ratio one movement. Okay, let me try to take this trade on the MT5 account on my phone here. That's okay, that's 12.1 pips. Okay, so that's 0.625 and lot size, and we will be taking that right now. That's 0.31. Okay, we take the other one too. Yeah, now we are in this position. Okay, we can continue with this in the evening. If there be any trade I take during the day, we will come back to that and explain why and also do the recaps together. So this is my list of currency pairs. They are just 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 currency pairs, including gold. All right, thank you for joining this morning. See you in the